Welcome, Coleman Report Live, October 11th, post-Hurricane Michael edition. We see a lot of you on. I hope it wasn't too tragic. Hey, we have a special guest today, Bill Phelan, president, founder, co-founder, PayNet. Bill runs a really cool company, a lot of good data. I cover his stuff. His specialty is providing credit memos and financial analysis for small business lenders. Bill, you're the analytical data guru of small business loan performance. How are we doing as an industry? How's Main Street doing?
It's doing great right now, Bob. Actually, I left my propeller helmet in the other room, so I'm not going to wear that right now. But what we see is that Main Street's rolling right now. It's really boom times. It's almost blistering pace of borrowing by small businesses across the United States. And what they're doing is they're finding good investment opportunities to put more capital to work, to buy more property, plant, equipment, and they need that capital from the banking system. And that's alongside just very strong financial health for these Main Street companies. So our indices show this really all-time record pace of borrowings from small businesses.
Lance and I always remind everyone, we have a little gray hair, a little experience with us. These boom times will stop at some point in time. Now, we're not predicting when, so I'm going to put you on the spot. How much more aggressive should small business lenders be from Main Street?
Well, what I could tell you, Bob, is that the businesses are putting money to work, and it really just kicked in back in October. So this is not, they've been on pause, since the Great Recession ended in some way, shape, or form. Yes, they've recovered, but no, they haven't, reached new levels of borrowing money from the banking system. And so we're seeing now with the 16% year-over-year increase, we're seeing this record level of investments by small businesses. It really kicked in last October. I think maybe the tax bill had something to do with it. We've seen 11 consecutive monthly increases, and 4 of them are double-digit increases. And the trend line is actually positive as well at 12%. And so it's a very rapid pace. It continues in this recent month's release, and it's consistent with some of the other data out there, the NFIB, the National Federation of Independent Businesses. Their small business lending index is also up at record highs because they're seeing businesses increase inventories. So we're seeing capital going to property, plant, equipment, acquisitions, hiring. We're seeing optimism to invest in more inventories. And this means that these businesses are not getting frothy. It shows that the credit risk is really benign right now. In fact, it actually improved last month by 1 basis point, which we were kind of surprised about.
Yeah, and that's what I find amazing is it took a long time for small business lending to ramp up. Do you think lenders as well as Main Street have learned from the horrible numbers that we saw in the bankruptcies and the business closures? Did we all learn from the last recession, or do you see a repeat of that down the road?
Well, actually, there's almost like when you go golfing and you drive the golf cart and you can only go about 8 miles an hour because there's a governor on the golf cart. And it's probably a good thing because a lot of golf carts would end up in the pond otherwise. But there's a governor on the banking system right now, and it's the lack of digital lending capabilities. And so the banks they're still running paper processes, and that's really holding back some of this granting of credit in a sense, because when you run a paper process, it's going to take 30 to 45 days. It's going to cost your bank $5,000 per application, and it's going to cause fatigue among the businesses who are used to faster answers in other parts of their business. And so, Bob, there is this natural governor on the system right now, and what would be a better situation would be if the banks had the digital lending capabilities and they could turn the spigot on and off as they see the economy changing. So right now we're seeing them, they're missing some business. Go ahead, Hart.
See that happening? Do you see the small business lenders going more digital and speeding up that process system, especially in the SBA world?
Well, the top 6 right now are completely digitized. I mean, I was speaking to a group of 50 bankers, CEOs last Friday, and what I found is that the top 6, they're spending $8 billion a year on capital for technology in their banks. And so they have the wherewithal. But everybody below that is interested. In fact, I had a lot of CEOs come up to me afterwards and ask, how do I get to be digital? What do I do? And so there's quite a bit of interest. There's an ecosystem developing of digital capabilities, and the SBA system itself. I mean, we've seen what Live Oak Bank did. They're just a terrific example of how you can leverage technology to build a fantastic platform. And so digital is table stakes now, Bob. You got to have digital. You got to be able to respond quickly, and then you got to be able to manage it, turn the spigot on, off as the economic conditions are dictate.
Yeah, and Lance and I are big fans of SBA One, of what SBA is doing, and they're trying to do that as well. So that's interesting perspective. Bill, real quick, industries. What industries are great lending opportunities for the bankers on the line?
Well, right now, transportation and warehousing booming, up 20%. A lot of goods being shipped back and forth. Believe it or not, mining has made a comeback. Mining is back. They are borrowing money, and default rates are improving there. Another top three is arts and entertainment. Doesn't seem like a big market, not a huge market, but it's big in certain locations like Los Angeles, of course. Construction continues to be strong, up 8% year over year. And then we're running the table with healthcare up 5%, agriculture up 5%, and manufacturing up 4.9%. So here are some great industries. It really, the broadness of these industries expansions shows that the broad economic activity that's going on in the United States right now. And it's diverse across the 10 largest states. It isn't just one state or one part of the country that's displaying this kind of expansion.
Bill, I really appreciate your insight. Please go to his website, paynet.com. There's a report you can sign up for, a lot of great analytical data. If you're a data geek like Lance and I are, it's great stuff. Bill, please, you're a friend. Please come back soon, because I'd love to talk to you more about this. Bill Phelan, President, co-founder of PayNet. Bill, thank you very much.
Thank you very much.
Welcome all. Bill, I appreciate that. Let's go to the polls. We got two quick polls for you. And I don't expect you to know the answers, so don't worry if you don't know the answers. This is a guess one, and we're going to do this to reinforce what's going on in the industry. What I appreciate about this question is Newtek is a public company, so there's a lot of interesting data that we're able to determine on what they are doing with their portfolios. Usually the SBA division is buried and we don't get this granular data. So what do you think PayNet got in terms of premiums for the 3 months ending September 30th? And Lance, almost close. They got 109.29. That's what they got, and the 110 is actually what they got in the first 9 months. So I wanted to show these numbers to show the secondary premium market has dropped a bit.
Well, Bob, if everything you packaged was a 25-year term, 2 3/4 over prime adjusting quarterly, that number would be higher. But it's just indicative. Newtek, actually in my past, Bob, I actually worked for Newtek. They're selling a variety of loans on the secondary market, and we are seeing premiums trend down a little bit.
And that's why I think this is a good number when you're putting together your budget for 2019. It's always difficult to predict, but obviously the market has dropped from the 110.7 to 109.3. So that is a fairly significant drop when you're looking at their numbers. Other interesting things is their loan volume is up 23%, which I believe is consistent across for the industry. And if you want to get into some more numbers, they have an interesting model that they provide a level of services for the SBA lending industry. So I thought that would be interesting. Hey, I want to shift gears a bit. There was a new Federal Register notice that's being proposed. Now, this is a proposal. This is not cast in stone. In fact, you have the ability to comment on this through November 27th. But what is SBA proposing in the rule, which would take effect if this goes into effect sometime next year? For loan packaging fees over $350,000, SBA is proposing a cap. What do you think that cap is? And again, I don't expect you to know the answer, but this sort of reinforces what we're talking about.
Well, and the thing about this, Bob, is this doesn't take away the new information about the Form 159 that requires us to document our file with those loan packaging activities and the costs related to those. But They're just wanting to cap the fees.
Yeah. And again, Lance did a webinar on this on Wednesday. The answer is, you got it right, $5,000. $30,000 is the old number, which is in place actually as of today. But they're proposing a capping these fees at $5,000. We're going to summarize Lance's webinar very quickly. But the takeaway is, when you're doing your budget for next year, I think it's perfectly permissible and prudent to anticipate a little bit rise in your SBA 7A loan income, because now you can no longer do that standardized $2,500 fee. Any packaging fee has to be broken out, so we might as well go ahead and do it. And that $2,500 fee has been there forever, and adjusted for inflation. It's a lower income stream to the bank. Go ahead, Lance.
I think it's a participant bank's opportunity to charge at what it actually costs to get the loan put on the books. The cap, it's kind of interesting, Bob. It would be a lot simpler if they just say $5,000 and you don't have to itemize, but they haven't done that. They're still going to require you to document your file with itemization. But the $5,000 fee, it's like, I think we'll see packaging fee dollar amounts trend up. I really do.
And here are the takeaways from the notice. For loans less than $350,000, they're proposing a cap at $2,500, which all of you who's participated in my survey says that doesn't make any sense, because these packaging fees are not loan dollar amount. They don't mesh. You could have a smaller loan with a number of affiliates where it's going to take much more time than the larger loan. But this is what SBA is proposing, and you have until November 27th to comment on it. I'm sure all the trade organizations will do that. But individual lenders are, if you're so inclined, to go ahead and read the notice and do that. Very quickly, also, the main criticism that SBA has of the industry is with the loan service providers. And the problem is they're discovering the loan service providers are charging a packaging fee to the applicant as well as the lender, and they want to get rid of that. That is what's driving this. The key takeaway is SBA is concerned about what the applicant is being charged. Yeah, they're talking about referral fees and disclosures. They're not interested in addressing that in the market. It's still a free market, whatever you want to negotiate. But what they want to do is they want to limit the fees out of pocket by the applicant.
Well, and they want to eliminate duplication of fees, Bob. If you've got a closing statement that shows a $2,500 fee to the LSP and you charge a $2,500 fee for packaging, they don't want double dipping. The LSP can charge a packaging fee, or you as a participant lending institution can charge a packaging fee, but both cannot.
Right. And these are the fees that SBA is saying are reasonable for what an LSP can charge or a loan broker can charge in helping to prepare that package. And they are reduced a little bit. Obviously, there's the 30,000 number is still there. And again, remember, these are fees charged directly in preparing the package. And those first numbers that I refer to is what the lender can charge. So
yeah, I would be interested, Bob, to find out. Someday we may need to do a poll question because we do a lot of research on how much participant banks are charging for packaging fees. But, I'd be interested to find out if someone ever itemized and charged a fee, say $10,000, $15,000, $20,000. In my previous life, I reviewed a lot of files, Bob, and I have seen a packaging fee in the $30,000 range.
And the lender, you're going to be responsible for approving these fees. Again, this isn't in stone yet, but this is a glimpse of what will happen. And SBA is very concerned. They're not concerned about the referral fees paid to the loan broker or the LSP by the lender. They're concerned about the fees being paid by the borrower, and that's what SBA is going to be focusing on. So I think that's something that you can take away from that right now. Lance, we have a ton of questions. Let's get to them. And the first question is, Lance, can you provide more insight into itemization? That's the most common question we have. We simply can't put 20 hours at $100 an hour. What's your best quick pick?
Well, I think that you want to develop a spreadsheet to itemize the efforts in various categories. It's like I said on the webinar yesterday, Bob, you can't charge for doing the 1920, and you can't charge for underwriting, but you can charge for completion of forms for the borrower. The 1920 is the bank's form. You can't do that. I like, Bob, until someone tells me differently, to have more generic categories of activity, like loan closing activity, preparation of borrower forms, review and assistance with business plan, review and assistance with projections, more general categories, not putting yourself in a position where SBA says that part of the fee is disallowed.
And remember that the comment by Eugene is, hey, what's the best way to itemize work when charging more than $2,500? The new takeaway is you have to itemize everything. Even if you charge $1,000, you still need to itemize that. I would not be too concerned about that process. It's going to be to your institution. SBA wants to see that you're breaking it out and you're not charging a standardized fee. I would not get too hung up on the categories, what you call it, and the dollar amount. I would do it, have someone sign it. It was Lance's recommendation. Does this seem reasonable and prudent to charge the applicant?
I think Bob's right on point here, guys. I don't think SBA is looking for us to have some incredibly complex form. They just want you to have something in file that shows that you thought about what areas of activity were involved in packaging, so they can look at and determine if those are reasonable. And the main takeaway that Bob made just a few minutes ago, it doesn't matter if it's 2,500 or up or 2,500 or less, you're going to have an itemization attached to your 159 in your SBA loan file.
Mike asked the question, it's a common question, can we get a packaging fee from the applicant and also a referral fee from the lender for the same transaction lanes?
And the answer is yes. Yes, absolutely. You can't get for instance, a third party provider can't charge a packaging fee and then you as a participant bank do so. Main thing, yes, you can do this, but the main thing to remember is you can't duplicate that fee. Only one party can collect the fee from the borrower.
And the fee needs to be disclosed. We have to disclose it on the 159. But again, SBA is more concerned about that packaging fee than they are the referral fee in a fair market transaction. Randy asked the question on contingency fees. Lance, what's your...
Well, you're prohibited from charging a contingency fee, which means a fee subject to SBA loan approval. And then SBA prohibits flat fees. I think the takeaway here, Bob, is they're wanting to see you charge a fee that's appropriate for the loan you're working on. You can't just say, okay, we're going to charge $1,000 per loan, irregardless of how many affiliates they have, irregardless of the complexity of the loan. They want to see, all they're looking for, Bob, is that we as participant banks think about what the packaging fee should actually be instead of just having, and again, a standard fee is now prohibited. You can't just charge $1,000. They're wanting to see area.
We got an open mic somewhere. Can you guys shut that off? It may be Mills. But we get a lot of questions about, can we still take a deposit for the packaging fee up front and refund it if the loan is declined, Lance?
And the answer is absolutely.
And I had this question separately, which was, is it allowable for us to take a portion of that packaging fee, usually the $2,500 deposit, and take care of that? And the answer is you can do that. I would not recommend that. I think that's opened up a can of worms.
I think if you're going to refund the packaging fee if the deal doesn't refund it.
Just refund it. Guys, can we move ahead on the slides here, please? Are we, let's go to the next one, please. There we go. Mark asked the question. This is an interesting question. And the question is, can we do a separate model for allocating how many hours a loan closer has based upon your conventional loans? And the answer, I think, to this one is yes.
I think, and Mark's a friend of mine, by the way, Bob. He's from.
We won't hold that against him.
Don't hold that against him, but it's a great question. First of all, SBA, if you look in the fee section of the SOP 5010-5J, prohibits charging what's called an origination fee. I have seen lenders make the mistake and have the packaging fee called an origination fee on their closing statement. You cannot do that. However, Mark is asking the question, if we charge an origination fee on a $500,000 loan of, say, $2,500, would that be justification for a packaging fee of an equal amount on an SBA loan? And the answer is absolutely. It's a prudent way to look at what it costs to package a loan. If you're going to charge $2,500 on a non-guaranteed similar size loan, then you can charge that on the SBA loan. But important to point out, you still have to itemize the activities and come up with that amount.
Meredith asked the question, can we get reimbursed for our time on inputting stuff into SBA 1 as part of our packaging fee, Lance?
Now, this is another kind of tricky question, Bob. And my answer to the question is, I don't know that I would call it as a category time on SBA 1 input, but I think you can, Bob, because you can produce the SBA Form 19. You can produce a plethora of borrower forms on SBA 1. So I do think that time could be counted under a closing category.
Yeah,
as an
I agree with you. I don't think, go ahead.
It's important to note, Bob, and this was clear in the SOP and clear in the new release, you cannot charge, for instance, a standard amount on each loan for SBA origination software, whether it be SBA, of course, we didn't pay for SBA 1, whether it be SBA 1, but let's say you have PCFS 2000, and you say, I'm going to charge every borrower $500 to support. You can't do that.
Alexa asked the question. Oh, I love this question. Lance, you're going to love this. I just want to reach out to confirm whether or not the SBA loan online broker class has a time limit overall. I expected to be a little further along than I am, but I'm currently 8 months pregnant, and the baby's going to be coming a little bit early. Can I delay that? The answer is, of course, Alexa. That's why it's online. It's at your pace. Congratulations. And no, I think this is a permissible reason to take a nice break, and all of our online training is structured that way.
Hey, congratulations, Alexa.
Alexa, very good. Let's see, a couple of other notes. Hey, this is pretty cool, Lance. The chair of the Senate Small Business Committee, James Risch out of Idaho, will be our keynote speaker at the Secondary Market Summit. And this is going to be cool because December 4th is the event, and I think there's an election coming up that's going to impact our politicians. So it'd be interesting to see what his view on that is, whether he's still going to be the chairman, and what his opinion is about SBA. He's very SBA friendly, very Main Street friendly. I've had the privilege of meeting him a couple times, so that's a nice thing for him to drop by to talk to the industry. He's very committed to SBA lending programs, Lance.
Well, I think it's going to be a great event. Having the chairman of the Senate Small Business Committee is going to be exciting, Bob.
Yeah, and you're going to be there also. I believe you're going to be teaching a breakout session on, we have an issue on servicing and a workout, and how do we deal with the secondary market on buying that back and working with them. And Lance, in the room, we're going to have the secondary market people, the investors there. So that'll be very enlightening for them as well as for the lenders.
Absolutely. And it's important as participant lenders to understand that those loans we sell on the secondary market, if they do, we still have to service those. You know, we get 1% from the investor to service and liquidate those loans appropriately. So it'll be a fun time.
Let's see, upcoming events. I'm going to be the keynote speaker a week from today in Miami, talking about SBA lending, talking about a lot of the things we're talking about here. I'm talking with loan brokers, and obviously they're going to be very concerned about how they get compensated from the applicant, from their client, as well as the lender. So I'll be discussing that. If for some reason you're down there in Miami, please look me up. But the reason why I bring about this, Lance, we're going to be on the road. So Coleman Report Live will be live from Miami next week.
Bob, I don't know why I'm not going to be there, but
Invite.
I'll be up here in chilly Northwest Arkansas.
I pulled up the temperature. It's 86 with 85% humidity. Hey, shout out to First Home Bank. We're going to do a separate training for them on our underwriting and loan closing training that's going to start next week. Lance, give a little shout out about what you do for loan closing and what is your approach to teaching this 8-week course?
Well, the SBA Loan Closer course is designed to give you short 10 to 15 minute segments that are easy to digest, and you can sit down and do the entire week in one setting, or you can do all 8 weeks in one setting, or you can do them 15 minutes at a time. But we try to give you the tools to enhance your ability to properly close an SBA loan. We've updated this to reflect all of the SOP 5010 5J changes, and it's just, if you're involved in the closing process for SBA loans, it is a great course to be involved in. And there's still time, Bob, still time to sign up.
We're starting next week, and First Home, we're going to do a separate meet and greet with them at the top of the hour, so I want to be clear. So please log on for that, and Lance and I will discuss this a lot more in depth. We have some webinars coming up, and but you would appreciate this from our friend Paul. The echo dot in my office went off each time you said Alexa.
Hey, Paul, I'm surprised you're not on the golf course, my friend.
Lance, what's going on in a couple of weeks? Why is this an important course?
Well, litigation plans, understanding how to get reimbursed for your CPC expenses, and very importantly, understanding that you are not done when you've liquidated the loan and collected all possible funds. You've got to wrap up your SBA loan. We've had several interest rate increases. We're going to have borrowers that get stressed, and we're going to need to understand how to properly litigate and liquidate an SBA loan.
Very good. Hey, thank you all very much for joining us. At bottom of the hour, we respect your time. Keep those questions coming. We know this is an interesting time, and there's a lot of murkiness, so Lance and I are here to try to sort that out. Thank you very much.
Thank you. Have a good weekend.